Retiring early is a dream for many, but making it a reality requires strategic financial planning and smart investments. While simply saving money might not be enough, building a portfolio of income-generating and wealth-growing assets can help you achieve financial independence sooner than you think. In today's video, we will explore various asset classes that can help you retire early, offering long-term growth and passive income. These assets, when carefully chosen and managed, can create a solid financial foundation to support you in your early retirement years. Number 1. Real estate, building wealth through property. One of the most reliable and popular assets for those looking to retire early is real estate. Real estate provides two significant ways to build wealth: property appreciation and rental income. Over time, the value of real estate tends to increase, allowing investors to grow their net worth through property appreciation. When you buy a home or invest in rental properties, the price of the property typically rises, especially in high-demand areas. This increase in value adds to your wealth without any active effort on your part. The second key benefit of real estate is rental income. Owning rental properties means you receive monthly payments from tenants, which can cover your expenses or even generate profit. Many early retirees rely on rental income to provide a steady stream of cash that can replace their paycheck. If you manage your properties well or hire a property management company, rental income can be a relatively passive source of income. For those who don't want the responsibilities of managing properties directly, real estate investment trusts, REITs, offer an excellent alternative. REITs allow you to invest in income-producing real estate, like shopping malls, office buildings, and apartments, without the hassle of property management. These companies pool investors' money to purchase and manage large properties, and they distribute a portion of the income to shareholders in the form of dividends. Investing in REITs gives you exposure to real estate without the need to own or manage physical property, while still providing consistent dividends that can serve as income in your retirement. Whether through direct property ownership or investing in REITs, real estate offers both income and appreciation, making it a powerful asset for achieving early retirement. Number 2. Dividend-paying stocks, earning passive income. Dividend-paying stocks are another essential asset for anyone looking to retire early. Unlike regular stocks, which only appreciate in value, dividend stocks provide regular payments, allowing you to earn passive income. Dividends are portions of a company's profits that are distributed to shareholders, and they can be a consistent source of income. The more shares you own in a dividend-paying company, the higher your dividend payouts will be. Many companies in sectors like utilities, consumer goods, and financial services pay reliable dividends. These companies tend to be large, stable, and well-established, making them relatively low-risk investments. For instance, companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble have long histories of paying dividends, even during economic downturns. This makes them particularly attractive for retirees seeking consistent income. In addition to receiving regular payments, reinvesting dividends can help your investment grow over time. When you reinvest dividends, you buy more shares of the company, which increases your future dividend payments. This creates a compounding effect where your income and investment continue to grow over time. By the time you retire, you could have built a significant portfolio of dividend-paying stocks that generates enough income to cover your living expenses without the need to sell your shares. Overall, dividend stocks are an excellent way to create a passive income stream that supports your retirement, while also benefiting from the growth of the stock market. Especially in this year, REITs and high dividend stocks have become more sought after. The reason is because of the interest rate cuts. The interest rate cuts lead to lower interest rates for banks, and real estate-related loan interest rates will be lowered, and at the same time, people will be looking for higher interest returns on their investments. So REITs with stable dividends and high dividends have become more popular, and in case you don't know, REITs in Canada are up 10% to 25% this year. You may not realize it, but Canadian REITs are up 10% to 25% this year, and with a stable dividend, that's a pretty impressive return. But whether you want to invest in REITs or high dividend stocks, it's easier with Moomoo, an internet tech brokerage that has a strategic partnership with the NASDAQ and the TSX, making investing in REITs and high dividends much easier on Moomoo. For example, REITs, you can directly search for REITs on Moomoo, and you will get a concept board that contains all Canadian REITs. You can sort by year-to-date rise and fall to filter potential REITs, and you can also check the details of dividend payout with one click on the company on the stock quote page and know exactly what the dividend yield is if you are looking to invest in high dividend. If you're looking to invest in high dividend stocks, it's easy. Moomoo has a list of high dividend yield stocks set, a dividend yield range, please specify your range, choose stocks with a share price over $1 and a market cap of at least $10 billion. You'll get a list sorted by dividend yield. You can also access the company to see its dividend payout with visual chart to help you identify if the stock is growing its dividend payout, which is crucial. You can also see when dividends are paid and subscribe to receive them by holding the stock a day before the payout. Moomoo also supports DRIP, which automatically reinvests your dividends into high dividend stocks, so your assets will snowball. Additionally, I'm excited to share that through my partnership with Moomoo, you can take advantage of a limited time special deal where you'll receive up to 15 free stocks when you sign up via my link. Plus, you'll enjoy 3 months of 8.1% APY and up to a $300 reward when you transfer to Moomoo. Terms and conditions apply, so be sure to use my link for the deposit to enjoy the special deal. Number 3, index funds. Simple, low-cost growth. Index funds are one of the simplest and most effective ways to invest for early retirement. These funds track the performance of a specific market index, such as the S&P 500, and they offer a low-cost, diversified way to invest in the stock market. The main advantage of index funds is their low fees. Unlike actively managed mutual funds, which charge higher fees for professional management, index funds are passively managed, meaning their expenses are minimal. Index funds are also a great way to diversify your portfolio. Instead of investing in a single company, you invest in an entire index, which means you own a small portion of many different companies. For example, an S&P 500 index fund gives you exposure to 500 of the largest companies in the United States, including giants like Apple, Microsoft, and Amazon. This diversification reduces your risk because if one company performs poorly, others in the index may perform well, balancing out your returns. Over the long term, index funds tend to deliver solid returns, which makes them ideal for building wealth. Historically, the stock market has grown by about 7 to 10% per year, which means that if you consistently invest in an index fund, your money will likely grow over time. For early retirees, index funds offer a simple, low-maintenance way to achieve steady growth, making them a cornerstone of any long-term retirement strategy. Number 4, bond stability and income in retirement. As you approach retirement, stability becomes more important in your investment portfolio. Bonds are an excellent asset for providing steady income and protecting your capital. When you buy a bond, you are essentially lending money to a company or government in exchange for regular interest payments. These interest payments provide a predictable and reliable source of income, which is crucial when you no longer have a regular paycheck. Bonds are also less volatile than stocks, making them a safer investment, especially during economic downturns. While stocks can fluctuate wildly, bonds tend to remain stable, preserving your capital. This stability is particularly important for retirees who need to ensure that their money is safe and accessible when they need it. Investing in a mix of stocks and bonds can create a balanced portfolio that provides both growth and stability. Bonds offer a cushion during market volatility, ensuring that you have a steady income stream even when stock prices are falling. For early retirees, having bonds in your portfolio can help smooth out the ups and downs of the market and provide the security you need in retirement. Number 5, cryptocurrency. High risk, high reward. Cryptocurrencies like Bitcoin and Ethereum have become popular investments in recent years, particularly for those looking for high growth potential. While cryptocurrencies are highly volatile, they also offer the potential for significant returns. Early investors in Bitcoin, for example, have seen enormous gains over the past decade. If you are willing to take on more risk in your portfolio, cryptocurrencies can be a way to accelerate your path to early retirement. However, it's important to approach cryptocurrency with caution. Prices can fluctuate wildly, and the market is still relatively new and unpredictable. For this reason, it's best to keep cryptocurrency as a small portion of your overall portfolio. This way, you can benefit from its growth potential without exposing your entire portfolio to unnecessary risk. Cryptocurrency is not for everyone, but for those with a higher tolerance for risk, it can be a valuable addition to a retirement strategy. Number 6, starting a side business. Building passive income. One often overlooked asset for early retirement is starting a side business that generates passive income. While this isn't a traditional investment like stocks or bonds, owning a business can provide significant returns over time. Many people who retire early have created online businesses, blogs, or e-commerce stores that generate passive income without requiring them to work full-time. The advantage of a side business is that it can grow and scale over time. A successful side business can provide enough income to replace your regular job, giving you the freedom to retire earlier. Additionally, once your business reaches a certain level of success, you may have the option to sell it for a lump sum, which can fund your retirement further. Building a business requires effort up front, but the long-term rewards can be significant, especially if it generates passive income that continues to flow even after you step away from the day-to-day operations. Number 7, maximizing tax-advantaged accounts. While tax-advantaged accounts like 401(k)s and IRAs are not specific assets, they are essential tools for building wealth and retiring early. These accounts allow your investments to grow tax-free or tax-deferred, which means you keep more of your money. Contributing to these accounts can help you accumulate wealth faster by reducing your tax burden. For example, a Roth IRA allows your investments to grow tax-free, and you won't pay taxes on your withdrawals during retirement. A 401(k) account, especially if your employer offers matching contributions, can significantly boost your retirement savings. By maximizing contributions to these accounts, you can take full advantage of the tax benefits, accelerating your path to financial independence. Retiring early may seem like a distant goal, but with the right combination of assets, it's entirely achievable. In today's video, we explored how investing in real estate, dividend-paying stocks, index funds, bonds, cryptocurrency, and side businesses can create multiple streams of income and grow your wealth over time. The key is to start early, diversify your investments, and focus on building assets that provide both income and long-term growth. With a well-rounded portfolio and a disciplined approach, early retirement can become more than just a dream. It can be your reality.